Hello. What's up, everyone? Let me know if you can hear this, and let me know how the audio is because it's raining. I'm outside on this terrace right now, and if the audio is terrible, we could switch it up. There's no issue with that. But if it's good to go and you can hear me, then let's proceed with this. But I'm gonna have to get some kind of feedback on that audio. Let me know how this sounds. Let me know if anything's good. If not, I'm just gonna continue and assume it's fine. If no one says it's terrible. Today it is Wednesday. Is it? I think it's Wednesday, December 7th. Damn, how things have progressed. So today, Wednesday, December 7th, and there's not really too much to talk about. We've seen some downside in this market throughout the week in itself. Is just continuously just inching lower and lower without too much of a real catalyst. Nothing really coming in and just thwarting things. We're coming into a blackout period for the Fed. Maybe that's why some of these actual sellers actually finally came out, knowing that the Fed isn't going to be there to reverse their positioning. So we have a blackout period in the Fed until next week, I believe. We have PPI that comes out this Friday, which is going to be interesting. Inflation number. We have CPI the week after, and we also will have the FOMC, which is going to be a very, very interesting event where we're expected to hike rates by only 50 basis points in comparison to the 75 bips that we've seen numerous times in numerous Fed announcements. So let me perfect. Thank you guys. TJ, appreciate it. Good morning, Mary, for the feedback on that. But about 77% expected of a 50 basis point hike, which would put us in between 425 and 450 into the end of the year, right? A 23% chance of a 75 basis point hike. And we'll see how Powell kind of reacts to that and what Powell says going into that. Now, with that being said, there's not necessarily too much to talk about, too much news. The main thing, the topic at hand is what China is up to, what's going on in China, and talking a little more about the levels. And we could even open up a market maker positioning tool, which is one of the main things that helped throughout the last few weeks to really give us some kind of anticipated directionality, along with areas of threshold where price is expected to stall out. So while that loads, let's talk a little more about China. I'll talk to you guys about the market maker positioning for today and for tomorrow, but let me just see if I can load this. While this loads, let's talk about China here. So China, right? Stocks in China, they're not getting too much love despite another easing in the country's zero COVID policy. The Shanghai Composite ended the session down 4%, while the Hang Seng Index closed 3.2% lower on Wednesday. So investors also appear to be focused on trade data for November that was reported overnight for, I guess, a lot of people, which showed exports at negative 8.7% year over year and imports negative 10.6% year over year, shrinking at the steepest pace since 2020. Now, outbound shipments will receive a limited boost from the easing of China's virus restrictions, which are no longer a major constraint on the ability of manufacturers to meet orders, said Julian Evans Pritchard, a senior China economist at Capital Economics. And of much greater consequences will be the downturn in the global demand for Chinese goods due to the reversal in the pandemic era demand and the global oncoming recession. So the government has tried to respond to the weakening growth by implementing a series of policy measures like cutting the reserve requirement ratios of banks and loosening financial restrictions to save the property sector. Now, China also trying to play catch up by loosening the severe COVID measures. And though a full-blown relaxation of pandemic controls will take significantly more time, and high-risk areas will still remain subject to lockdown-like restrictions. So I'm not here to really comment about this stuff. I'm just commenting about the effect on their lockdowns in terms of their exports, global demand, and all of that affects their market, which is putting a downward swing based on the economic data that kind of overshadowed what those easing restrictions were. Now, when it comes down to it, we dropped a little bit here in the S&P pre-market before we caught somewhat of a rally. Right now, prices are kind of teetering around that high 30 area. From about 39 to about 41, I have this huge area where we saw a lot of sellers break finally through that, really spurred that next move to the downside on the S&P 500 futures. So 37 is the region where it starts, actually 37 up to 41. I understand this is a very large block, but keep that area in mind as we come into the open here. So I'm going to be watching that area very, very closely today and seeing if the sellers come through to that area. We bounced off of that 3,915. Keep that area in mind. It's a huge pivot for the buyers. Now, the final area for sellers to come in is 3,952 up to 55 on the S&P 500 futures. If that area does break, there could be some kind of stronger reversal in this market to the upside that accepts to the upside. But keep that in mind. I'm going to be watching those two main areas to see if we can squeeze to the downside from 3,937 to 41, and then 3,952 to 55. Now, to the downside, we have talked about the downside because we're very, very close to entering a distribution block lower, which starts at 39.03-ish all the way down to 38.95. So that huge area, it is a big area, yes, but if we start to accept below those areas, we are going to be entering a distribution block to the downside, which is going to put more downside pressure in the market. Now, will we have another red day in this market? We'll see. It doesn't seem like the bears are too certain this morning, but a lot can change. If I'm taking a look at this market maker positioning, I'm going to be looking at where the gamma positioning is, where there's a big spike in the gamma hedge, which happens to be at 394 on the SPY. That, yes, compared to yesterday's number was 400. There was a huge pivot off that area. 394 happens to be in and around the futures area of 3,952 to 55. So that is the final threshold break for us to really hold out the bear side and see if we can get that push to the downside. Otherwise, above, right, we get that pivotal moment where we could see a pop to the upside. So keep that in mind as we open today's Wednesday hump day, right? Call it what you will, and we'll keep all those areas in mind. We got a little question here. Thoughts on a weekly? Looking like we might be making a lower high and going down to make a new low for the year. So it's a very interesting question, actually, because there is a potential for that. If there wasn't this much Fed data and other economic data that's coming out within the next week, I'd be more inclined to think that way as well, TJ. I think there could be the expectation to make a new low. Realistically, we're going to see how the Fed and the inflation data reacts, because that's pretty much all the market cares about right now. It's hard to determine what the outcome of that may be, but we could be in a period. The way I see it is, I feel like we're in a period where sellers are taking control of this as much as they can before those data points come out, and we do see somewhat of an upside. So I would like to think that there is maybe not a new low, but an attempt to break the low into the end of the year. But again, we have that Fed data and the economic data that could really surprise us. So it's all up in the air at this point. There is more sell pressure, and there's larger sell blocks that are coming into the market, and the expectation is for us to close somewhere the year at like 37-ish hundred, right? That is where a lot of the volume is on these larger options contracts. To the put and call side, there's expectations for about like 370-ish, 375 on the SPY. That's my thought. But again, it's just a thought. We'll see how this data comes out next week. That's the best I can do with that. Do I use quant data to track open interest for SPY options? I actually use something else now. It's called Vexly. It really gives me the gamma and delta positioning, which is market maker positioning, where they're hedging their positions. So you get these huge pivotal points where prices are expected to reject. They're like points of inflection. So I would highly suggest taking a look at that. They also have naturally open interest. They have the largest volume on the SPY, right? They have a lot of stuff. You can use quant data, or yeah, exactly, Logan. That's how it's spelled. You can use quant data or something else to track the open interest. You can even just look at an options chain if it comes down to open interest realistically to see where that open interest lies. And like very large numbers can stick out like a sore thumb. But those are my thoughts on those things, right there. In terms of options order flow, right? It's an interesting tool because I'm going to go on a rant here, because it is a little harder to decipher whether it's buying, selling, or parts of hedges without diving too much into wormholes and really getting into these positions. So just keep that in mind. Open interest, right? It could be buyers or sellers, but obviously it's pretty important to know what the large size is. So I like Vexly because it gives me concrete levels of inflection based on market maker positioning. So it's just a thought. But yeah, order flow tools along with Vexy, I think the combination, even just Vexly, is pretty good in my opinion. So having said that, thanks for the questions, guys. Thanks for the activity today. I really appreciate it. Hope you guys appreciated this update. We'll have more of these updates coming up. And I wish you all a great day, great trading day. And let's see what we get today. Again, 394 on the SPY, 3950-ish, 55-ish on the futures. We top that up. Realistically, that is where the price is going to rip to the upside, right? We take that over, it's going to rip to the upside. Thanks, Al. I appreciate that. I'm currently in Tenerife, in close to Morocco, close to Africa. It's a Spanish island in the Canaries, right? Canary Islands. So I'm going to be, well, it's raining right now, but the remainder of my trip here should be sunny. So I'll be doing updates from here. Thank you all, and chat soon.